Hey guys, welcome back to my channel, and this is the next episode of me documenting my journey towards my first payout. And guys, this is a way of me journaling my trades. Guys, lately the market haven't been treating me good, so I kind of slack up on recordings because the motivation wasn't there for the past few days. I kept taking on loss after loss after loss, guys, so that wasn't motivating me to make any videos. But today the market were a lot better. I saw my model played out very well today. I predicted the market very well today, and I'm going to show you guys how I was able to predict the market today. So guys, we're gonna be starting out on the higher time frame. On the daily, there was nothing much. Price was just heavily bullish. So from the 4-hour time frame, I saw that we had this fair value gap which was supporting price. That's all I saw. On the 4-hour time frame, we had this fair value gap supporting price, and price was moving bullish. So that was one hint of my bullish bias for the day. But what really gave me my bullishness and I was able to predict the market direction today, it was on the 1-hour time frame. So in my pre-market analysis, I saw this breaker here, this low, high, lower low, and price was displacing above these highs. And guys, if you have been following my channel for a while, you know I look for this pattern, this breaker and displacement above this high, leaving two fair value gaps stacked on top of each other. Most of the time, price comes back to test this first fair value gap, the first fair value gap, and this one stays open. And that was a perfect example of it today. Price came back into this fair value gap, left this one open, and displaced heavily up. So guys, in the pre-market analysis, we were here. When I was doing my analysis, we were here on this candle here. We had this fair value gap was about to form because at the 9 o'clock candle it wasn't closed as yet, but you could have seen this would have made a fair value gap, and this would have been the breakaway gap. So what I was looking for was price at open. I was looking for price to trade bearish. So I was waiting for price to trade down into this fair value gap and trade back up. I wasn't looking for price to trade to this fair value gap. This would have been my breakaway gap. As you can see, breakaway gap, I have it labeled 1-hour breakaway gap. So if price had come down to here, I wouldn't at least want to see price supported here, but I would not, on a good day like today, I would not want to see price trade to this fair value gap here. So this gave me a bearish bias, then a bullish bias for the day. Second confluence for the bearish movement before the bullish movement, what that is that we open with a gap below. So normally when we have a gap below, price normally trade towards that gap, filling it or partially filling it. So that was the next confluence for price to move bearish before moving bullish. As you can see, ES was a lot weaker than NQ. ES completely filled its opening gap here, and NQ only could trade to 50% of the gap here. So now the third confluence for my bearish movement before the bullish movement was this here. So as you know, if you have been following my channel for a while, in our pre-market analysis, we mark out the 7 o'clock and the 8:30 right here, 7 o'clock, 8:30, and we mark out the highest high, the highest swing high, and the highest swing low between the hours of 7 a.m. and 8:30 a.m. So the next confluence for the bearish movement is that we had already taken the highs in the pre-market between 8:30 and 9. We took the highs here. So normally when price take the high, we normally move to take the low before price moves in its direction it wants to trade. So we were at open, we were up that area here. So I was looking for price to trade bearish to take out these lows. So that's 3 confluences for lower prices. And the last confluence that I had for lower prices is that we were in a deep premium. So anytime price is above the both open, we are in a deep premium. If we are below the both open, that the open is the 8:30 open and the 12 o'clock midnight, if we are below that, we are in a deep discount. And normally if price want to move bullish, price would trade to a discount where people can buy it cheap, and then it would trade bullish. If price want to move bearish, you know, it will move to a premium and then move down to a discount. So when price open at 9, we are above the booth open, that put us in a deep premium. So that is the next confluence that price would have traded to a discount, which is below the 12 o'clock open. So price traded here. So guys, at open, I took this beautiful shot here when I saw that price took the highs between 7 a.m. and 8:30 a.m. We took the highs in the pre-market. The lows are remaining to be taken. We had the 12 o'clock open and the 8:30 open above the premium. We had a gap, so, and then we had the fair value gap, which I wanted price to trade to. So when I saw price trading higher on NQ, making this SMT here, ES never took the highs. ES never took the highs, giving us an SMT. I saw price move up, left the highs in place, then displaced down, close under. This is not a breaker, but it was a breaker on NQ, because NQ took the high. I saw that we close here underneath of this here. I took my contracts here. I took 4 contracts when price came up to retest this breaker here with my subs here, and I was targeting the lows, the 12 o'clock open and the lows. When we hit the 12 o'clock open, I took out 3 contracts and I left the last one. As you can see on the micro chart, we made equal lows. But if you can see on the mini chart, we took these lows. So that is the reason why I normally have the both micro and mini chart open, because sometimes the micro take the high or low and the mini doesn't, and vice versa. So right here, I took out my next. I closed right here when I saw price came down to here and was rejecting back. So that gave me a profit of $200+. I went in low. I was only risking $90, $90 something dollars, and I managed to gain $200+ with a more than two risk reward ratio I gain. This would have been, I didn't take this. As soon as I got my profit for the day, I closed out the chart. This could have been a next short when price retraced to discount of the range, which was 50% or higher. We had this nice displacement. The entry would have been here. I took my entry here on the breaker, the high, low, high, high. When price came back to retest the breaker, I would have taken my entry because I didn't take that trade. Subs above here, and I was targeted on 1 to 2. It wasn't hit, but normally we would have taken partials right here. So as you can see, price reacted on this low here. The lows between 7 a.m. and 8:30, price reacted here and was moving bullish. Then we had a next drive lower, you know, making an SMT with ES with NQ. See, NQ never came to take this low. So at this moment in time, if I hadn't taken the shots, I would have taken a long here. Price didn't, as you can see again. The next reason that I have my both mini and micro chart open. Look at this here. On the mini chart, we didn't take the 1 hour fair value gap that I wanted to see price trade into. So I wouldn't have taken this trade. As you can see here on the mini chart, it did take that. It did trade into this. I don't know how I didn't have it marked out, the 1 hour fair value gap. But it did trade into the 1 hour fair value gap on this candle here on the micro chart, but on the mini it didn't. So price traded up and then hit it, as you can see, hit the 50% of the gap, the 1 hour gap. User left a huge rejection and displacement above this high market structure shift, and along with the SMT, we had SMT with ES, market structure shift, leaving a fair value gap. Entry would have been here if I didn't take the shot. Entry would have been when price came back into this fair value gap. Stop, we could have put our stop here or here, and we could have target the highs or a 1 to 2 risk to reward ratio, and you can see that would have hit beautifully. So this was the trade for today. I was able to book 1 to 2 risk to reward ratio, a little more than 1 to 2 risk to reward ratio, and I'm slowly coming out of drawdown. You know, price action haven't been the best lately, so I was kind of on a losing streak, you know, questioning my model, but it's because of price action haven't been that well. You know, we have shallow runs and retracement. If you move your stop to break even, you are being taken out break even lately. But one thing I have implemented to try to combat my overtrading, because I have a serious overtrading problem, guys. Going forward, I'm going to be looking for a 1 to 2 risk to reward ratio and close out a 1 to 2 or more, and I will not be moving my stops to break even unless we hit the 1 to 2 risk to reward ratio. Because most of the time when I move into profit, I normally bring my stops to break even. Price come back, take me out, and I end up going into a next trade again that end up making me lose, and so on. So when I'm in a trade, I'm not going to move my stop to break even. I'm going to leave that trade. Is either it end up in a loss or it will end up in profit. I think that will help me to combat my over trading. So guys, this was the trade breakdown for today. If you find anything educational, if you find anything insightful, if you learned anything today, please drop a like on this video, comment, tell me that you found it educational, you found something valuable in this video. Like, comment, share. Peace out.